All right, y'all, back to work. Stop counting all that money over there. We got some more work to do. We got more winning trades to find tomorrow, right? All kidding aside, though, fantastic job today. Now you know how we combine that higher time frame direction with the lower time frame structure. Beautiful slingshot we talked about last night. Now, I got some more good news for us right now because that slingshot we predicted last night just gave us this huge move higher. It's one big clue. And that range we had yesterday, now we have this monster range breakout. That's a second big clue. So big move higher, range breakout. You put those two clues together and our roadmap tomorrow is pretty darn easy to make some more money on Thursday morning. In fact, that situation tonight gives us 3 different types of trades for tomorrow morning. I'm going to cover them all in tonight's video: entries, exits, some variations. But I'll tell you, one of those 3 trades we'll talk about tonight could make our entire month because tomorrow is the final day of July. So we have what might be the most important video of the week coming up here tonight. We're going to cover the entire roadmap in tonight's video. As always, thank you so much for tuning in and watching. Charts look fantastic. Enough of the intro. Let's dive in and make some more money on what should be another fantastic day tomorrow morning. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready, aren't they? I have 4 clues on these charts telling us where the money is probably made tomorrow morning. The first clue is right here on the hourly time frame. You probably know this already, but in case you don't, I like to use the hourly chart, the highest time frame, as my overall directional filter. It's very easy to see right now the buyers are in full control of momentum. That is my directional bias for Thursday morning. The second clue now is over on the calendar for tomorrow. Tomorrow is a busy Thursday morning. There are 4 things on my radar for tomorrow. First is the personal income number, also called the PCE deflator. It's well known as the Fed's favorite gauge of the real cost of inflation. Expect some volatility at 8:30 Eastern time. Also, too, you may not be aware of this, but tomorrow morning at 10 o'clock Eastern time, remember back a few months ago when that random court put a block on Trump's tariffs? Remember that a few months ago? And a few hours later, they've been reinstated on appeal. Remember that a few months ago? I know, we forgot about that, didn't we? Well, tomorrow morning, that Court of Appeals will be hearing arguments and hopefully making a ruling on that appeal from a few months ago. Now, in my eyes, this seems like the last kind of roadblock in getting these Trump tariffs implemented because it seems like Japan, the EU, Mexico is on the brink of a deal right now. It seems like most of our biggest trading partners in the US have either signed deals or have deals in the works right now. So I'll tell you, that is a really big kind of unknown for us tomorrow morning. So I will be watching my newsfeed headlines very closely from that 10 o'clock to 12 o'clock tomorrow morning. Nobody knows when the announcement will come out or what it will say. That's definitely something I'm watching. Third thing for tomorrow is we have some big earnings tomorrow night. We, of course, had Meta and Microsoft both completely blowing out their earnings, mirroring we saw from Google last week. Tons of investment in AI right now. And we have arguably even bigger earnings coming out tomorrow night. Little company you may have heard before, right? Apple, Amazon. You know those earnings are important as well. That's our third thing for tomorrow. And the final thing, I know one more. Tomorrow's the final day of the month. And we know that at the end of the month, traders take bigger risks. So we know volatility kicks up in the end of the month. So we have a jam-packed news schedule for tomorrow. PCE, the Court of Appeals, the big earnings tomorrow night, and again, end of the month, right? Buckle up, kids, because it's probably going to be a pretty volatile one tomorrow morning in our trade room. That's our second clue, believe it or not. I got 2 more clues here. I promised us 4 total clues. We covered 2 of the 4 so far. Let's now drill down to our tick charts right now because we're not going to trade off time charts. We trade tick charts in our trade room. Tick charts, by the way, in case you're watching for the first time right now, tick charts are based on volume. They're much easier for timing entries and pattern recognition than, say, a 5-minute chart, right? A time-based chart. That is a 7,000 tick chart, upper left-hand corner. And that, my friends, is the only indicator we need to find consistent winning trades each week. That is the 21 EMA. There's 2 more important clues here on the tick charts right now. Third clue overall, first clue in tick charts, big move higher. I don't want to buy high. I want to buy low, right? I want to buy a nice deep pullback. We know that after a big move higher, especially in these lower volume summertime months of July and August, we really can't trust big moves higher. I want to buy a nice deep pullback. That's my third clue. My final clue, which might be the most important clue out of them all, is, well, there's two ranges right here. There's a range we saw from last night, right? That slingshot we talked about last night. There's a range right there and a range right down there. Now, why is it important? Well, because ranges, if you learn one thing from me, I hope it is that ranges love to rotate. And once they break out, what do? They break out pullback. You can see right away here, there's two breakout pullback zones. There's one right here, and there's one a bit lower. Now, you don't need a lot of experience in trading to know this. The shallow pullback is a bit less desirable right in the deeper pullback right now. It's a big move higher, so obviously the deeper pullback is the more desirable right now. I'll bet we can structure this on both of these breakout pullbacks. So I mentioned earlier in the video tonight, the intro, that when I have a big move and a range breakout like this, there's really three types of trades I'm looking for right now. I want to cover the first two here on the S&P, but I'll tell you, if we're lucky tomorrow, we'll get that third trade, which could be so big it makes our entire month. I'm going to cover that a bit later on the Nasdaq. So let's talk about the first two right now. For example, buying a relatively shallow pullback, not as desirable. On a shallow pullback like this, I really want to try to buy as low as I can. And to do that, I'm going to use a pattern I teach in a lot more detail in our free video course. It's called a technical bear trap. So as we pull back right now, I'm anticipating this thing will try to go a bit lower into that deeper area. If I start seeing bears try twice here, I want to look for ways getting in underneath that low. Write this down. Shallow pullbacks, I have to get in underneath prior lows. If it bounces up off that low, I've got to get in underneath prior lows. It makes sense, right? I want to buy as low as I can. And if all I get is a shallow pullback, I will do whatever I can to buy as low as I can, which means getting in underneath prior swings. Now, in that same idea here, if we were to continue going higher here quite a bit, right? Yeah, see, now remember, everything's relative. If we keep running higher here overnight, now that pullback is, well, it's a lot deeper now, right? Comparably speaking, right? So on a deep pullback, on a deeper pullback, I can be a lot more aggressive on the entry because now I'm not so worried about buying high, right? Makes sense? So now, as we pull back now remember, guys, we're not going to blindly buy off these levels of support. Promise me you're not blindly trading off these levels, right? The trick is like we saw this afternoon, right? As it pulls back, just wait for bears to try once, try twice, and then buy right into those stop losses. So on a deeper pullback right now, I can be a lot more aggressive on this. Bears once, bears twice, higher high, and I can squeeze those stops running higher. Now, very important, okay? Very important. On a deeper pullback, I now have all this open space to work with. So what I'll do is as it runs higher here, I'm going to add to my winner because we know the market wants to go, right? It wants to go back up and take out that recent high up there. So if I have the benefit of that deeper pullback, now I can start to add to my position. And to add to our position, we start looking for separation off the moving average, a higher high in price, and we'll add a half position, a quarter position back on that add-on. So a second way to do this is a deeper pullback. It's a bear trap into an add-on going back up to retest the high. Now, I want to cover a few more variations of this. Then we'll grab the Nasdaq and talk about that third setup a bit later on in this video. Before I do that though, let's slow down for 2 seconds because I know right now, if you're watching this video for the first time right now, this might be a brand new strategy, a brand new language. What are bear traps? How do we add to our winners? Don't you worry, I teach all of this in my free trading classes. In fact, I have a ton of examples of all these entry patterns talking about tonight on this video. Guys, bottom line, the markets are way too good right now not to be making consistent profit. So I'll put a link up top there. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells me exactly where the winning trades are going to be each day. You're going to laugh when you see how simple that technique is. More importantly though, guys, we make our money by timing good entries. So in that free video class, I'm going to teach you 4 my favorite entry setups so you can time better entries, get your confidence back in your trading. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, what are you waiting for right now? Hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it's completely free for you. Also, to be aware, guys, I'm going to put all the important links you'll need to learn the roadmap, time better entries, get your confidence and your P&L back in shape again. I'm going to put all the important links below this video, the description of the YouTube video. Start first on the free video classes. You're going to love all those trade examples there. And don't forget too, guys, I post a ton of charts and videos and mindset stuff in between these YouTube channel. If you're on the X platform, on Twitter platform, give me a follow. You'll love that feed during the day. Again, all the information you'll need to learn the strategy, follow along during the day. Find those links in the description of the YouTube video. All right, so now you know where to go here to learn more about what I'm talking about here tonight on this video. Does that make sense, right? If we see a shallow pullback right now, I want to buy under prior swings, right? But a deeper pullback, I want to buy, again, I can be a lot more aggressive. And I can use a bear trap right there and trap in those sellers and run their stops back up again. Does that make sense, right? And again, remember, if we go higher overnight here now, everything's relative. At that point now that breakout pullback, see, now that is a deep pullback. Does that make sense? A shallow pullback, gotta be underneath prior swings, right? If we really get a deeper pullback now I can be a lot more aggressive with the bear trap I teach inside the free course. And again, the deeper the pullback is, the more I can add to my winner, because the more open space I have to go back up and retest that high. Now, let's talk about some variations right now, because oftentimes we don't get that bear trap down there. You know, we have a lot of optimism right now because of tariffs, because of earnings. So we may go higher overnight. We may see that big move down, but we may not get that bear trap. It may just whoop and run right back up again. Remember this. If it bounces hard and goes higher here, remember, I don't want to buy high. I want to buy low, right? So what's the game plan? The game plan is find prior swings. And my technique is always mark a trend line. Off the high, bring it down off that low. That creates that channel, right? Now look at this. Now there's not many guarantees in trading. There's no guarantees anything in trading, right? But that trade right there is almost a guaranteed winner. It'll give that deep pullback. Again, we're not going to get that 2-try bear trap down there. It'll bounce back up. There'll be so many buyers waiting to buy that dip. And the trick is, it'll begin to grind going higher, right? The grinder. If you're a student with me in the trade room, if you're with us in the trade room each day, you know when it grinds up like that, it's just a matter of time getting in below prior swings. The key is you want to buy low. If you can't buy low because it bounces up like that, buy below prior swings. That's where the money is waiting for you in a scenario like that. And one last thing too, then we'll go to the Nasdaq in a moment here. One last thing too, we do oftentimes see a sharp pullback, a bear trap off the zone, a pop-up, but every once in a while, we'll get our 1-to-1 first target. I'll move that stop up to my point of entry. Every once in a while, what happens is we get something like this where it'll run lower, it'll bear trap us in, it'll be a winning trade, but it holds the underbelly of that low right there. And with all of that momentum going lower, that strong move going lower, it oftentimes goes one more leg going lower. All right. Now we talked about this last night on the video, what I call the money zone down there. The money zone really is, it's nothing more than the area where a measured move, right? Measured move, and that low comes in, right? This is the money zone. What it really is it's the bear trap zone is what it is, right? So we call these retest trades in our trade room. Again, we'll run down, we'll trap the bears in. I'm gonna grab a quick one-to-one target like always. I'll move that stop up. It's a winning trade. And now it rolls over though and makes that run lower. Now, I'm gonna warn you right now, just like this afternoon, it's going to feel very bearish. But if you learned one thing this week, this is the tick chart. The tick chart is used for entries. It's not for direction. The hourly chart is for direction. It takes a lot more than another leg lower on the tick chart to turn this over to a bear market on the hourly time frame. Don't let the tick chart talk you out of that direction, right? Okay, so we run lower. We make that next leg down. This will be scary, but the best entries are scary, right? They're always the scariest. So it runs lower. When all the rookies start chasing after it, bears try once, bears try twice. Again, remember, think about that measured move, right? That measured move underneath that low. Anywhere underneath that low, that's your money zone. That's your bear trap zone. Trap those bears in. A ton of examples of these, by the way, in that free video course, just like here, right? Just like here. Once, twice, always a higher high. Always a higher high on these two tries. Trap those bears in, squeeze those stops. And again, whenever you have a big open space, back to the retest the high, start watching for that separation, okay? One of the easiest ways to really grow your account faster, get some big wins, is adding to your winners. When I learned this trick, this completely transformed my trading, right? Because again, you start seeing that separation off that moving average, start adding on. I'll take that first half off on the one-to-one and put that half right back on that add-on, right? A quick first profit target, we start seeing separation. Again, I teach all this stuff, by the way, inside that free video course I mentioned earlier, right? Profit targets come off at the high of that move. All right, that covers our two types of trades, or 2 out of 3 trades for tomorrow. Shallow pullback, deep pullback. And again, if we keep going, all of a sudden, right, that breakout pullback becomes the deep pullback because everything is relative. Let's now go talk Nasdaq right now. Nasdaq's getting lonely over here. I know, NQ, we're coming to you here. Boy, what a blast off of that low. Now, on the Nasdaq, first things first, this is what I said earlier, right? This is the hourly time frame. This tells us direction, okay? It will take a lot more than a deep pullback right now to turn this into a bear market. Do not lose sight of this. It's very important to use the higher time frame as your directional filter. Now, before I dive into the tick charts here, if you're enjoying tonight's video, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. And if you want to really help me out, share this video with other trading buddies. I'm sure everyone would love to learn these techniques. I know we're all busy people these days. I appreciate you all tuning in and watching my videos. So as always, thank you guys so much for the support here, all the likes, all the subs. Let's now dive in and talk about the tick charts right now. Ranges, they love to rotate, right? They love to rotate down, up, down, and slingshot, exactly how we described it last night on the video. You can see those 2 clues right now, very easy clues. One clue is a big move going higher. Why is it important? Because big moves tell us to buy nice and low, buy that deep pullback. And of course, now we have multiple ranges. Really, it's that range right here right now, right? That range right there really is the breakout pullback. I would say personally that is your shallow pullback. That is your deeper pullback, unless of course we continue going higher here overnight. If we really keep going to the moon overnight right now that area becomes a deep enough pullback to use that strategy we talked about earlier here on the S&P. Now, I mentioned there's one more strategy, one more setup we are watching for tomorrow, and that is a trading range up here. Okay, whenever we see a really big move going higher like this, there's probably a 50-50 chance tomorrow we see some sort of trading range up here. Now, why would that be a good clue? Or why would that, well, personally, I think that's the easiest one to make money. Because why? Because what do ranges do? Ranges love to rotate, right? They rotate up, they rotate down. I have a ton of emails from you all this week talking about how much you all love ranges for good reason, right? The amount above, the amount below. We use things like triangles and pendulum swings. I talk about this a lot more in that free video course. What else do we know about ranges? They love to break out pullback, right? So think about this. That range back there now, that is begging now for a breakout pullback. So in all reality, this would be the easiest one to make money with tomorrow, because if we can get a range up here, then, and of course, I don't know exactly where that range will be right now, but we'll know more about that tomorrow morning, obviously. If I can start going sideways up here in a range, I can now use the prior support levels, that breakout pullback zone below me, I can now use that as a key area of support. Now remember, when this thing pulls back on this, range breakouts, they almost always feel very convincing, right? They always feel that breakout lower felt very convincing, didn't it? Yeah, they always do. They always feel very convincing. That's also, we don't pick the bottom on that, right? We wait for it to pull back, let the bears get trapped in and squeeze those stops back up again. So we pull back below that range. It feels very convincing. We run into that area of support. And now remember, it's that same bear trap and add-on. It's that same one try, two try add-on, or sorry, bear trap. It's that same add-on, but unlike in a deep pullback environment, we're not just trying to go back to retest this high right now, right? The high up there is not our big target now. This is why ranges can be the most lucrative trade we get for tomorrow, because now where's the market trying to go? It wants to go below. Yeah, you got it. It wants to go higher now, right? So now separation off that moving average, higher high in price. I love range markets because once you know where that range is, you now know the amount below the range can now be projected now back above that range, and that is your final target, right? It's that initial bear trap. That's the full stop position. It's the add for half more on the add-on, and it's the whatever you do not cut that trade too early. It is leave that runner to that pendulum swing. Now remember, that knife cuts both ways. Okay, this is where things get a bit more difficult, I might say, unless you know what you're looking for, right? Then it gets kind of easy. So for example, we may go sideways. We may get some news tomorrow morning, right? That Court of Appeals may come out tomorrow. It may say something that causes the market to go higher first, all right? And now what'll happen is all these rookies will chase after it. It's a big move, right? We don't want to buy high. We want to buy low. Do not be surprised if, like today, we go higher first, then go lower, right? Go higher first, then crank and run lower. Remember, amount above, the amount below. And again, I'm warning you right now, this will feel very, very bearish. It will, but it's not a reversal. Remember, this is the tick chart. It's not the hourly chart, right? I'm not going to repeat it again, but again, we don't use the tick chart for direction. The tick chart's for entries. We know what our direction is, right? So when that voice in your head says, are you sure about this? You're probably on the right track, right? When I get that feeling in my stomach, that's when I know I'm probably on the right track with this, because the best entries, they're uncomfortable. Now, again, we're not going to pick a bottom on this, right? We're going to wait for that moving average to come over, wait for those bears, those rookie bears to commit. The folks who do not watch my YouTube channel, let them try twice, right? And we'll squeeze those stops back up again. Now, on this one, right? On this reversal off the high here like this, oftentimes this is the one that will just whoop and run right back up again, right? Because there'll be so many people that know this technique. So we may not get that bear trap down there. It may V bottom off that low. And I'm going to keep on saying this until this is burned in your memory bank. Whenever it bounces up right now, what's my problem? My problem is I'm buying high now. What's my solution? Buy under prior swings. Whenever we bounce hard on that pullback, and sometimes I get it, sometimes I don't. I don't control the markets. I want the bear trap down there. If I don't get it though, I can't. I don't want to make a mistrade turn into a losing trade, right? I don't want to let a mistrade had me buying high, getting stopped out right there, right as all the professionals are jumping in at the low of that channel, underneath that low. Again, there's not much guaranteed in trading, but that is almost a guaranteed winner right there. When it pops up, grinds back up, find that channel, and again, get in underneath that low. And please don't forget to, every once in a while, it'll make that next leg going lower. We won't get that signal off of that low like that. That is why we don't buy blindly. We wait for the proper signal that I teach in the free video course. If we get that next run going lower, has this now reversed now? No, right? It's all that is it's a retest trade, right? It's a retest trade. Breakout leg, measuring leg, it's a retest trade. That's your money zone down there, right? Again, anywhere below that low, and in all reality, it may bounce right off the top of that previous range. Same thing, retest trade, bears once, bears twice, squeeze them in. When you're caught short and you get stopped out of your short trades, you buy your way out. And again, if there's one thing you know about ranges, let those suckers run, keep adding to your winners, rinse and repeat over and over and over again. All right, that is our third scenario, third strategy we're watching for tomorrow. Again, I think ranges are the easiest ones for tomorrow. What do you think, though? I'd love to know, what's your favorite pattern for tomorrow? What's your game plan for tomorrow? Always enjoy hearing you guys' opinions in the comments section below. That's my plan for tomorrow. Now, speaking of tomorrow, though, the place to be is in our trade room. Guys, the easiest way to make consistent money in these markets is to learn and trade along with us every morning at the opening bell. I'm going to put all the important links you need to learn the entire roadmap. You're going to love that free video course. Start there first. Most folks start making money all on their own, all from that free video series. So enjoy the video course there, description of the YouTube video. But promise me, come join us in our trade room, and we'll do it together. That's what the good stuff is every morning at the opening bell. In the meantime, guys, fantastic job today. Hope you learned something tonight. Hope you earn a bunch from it tomorrow. And as always, be well out there. Be nice to each other out there. And be here next time, will ya? Adios, amigos. Bye for now.